Guys, if you have ever caught yourself thinking the trend seems so obvious, but the entry still often turns out to be late, then this video is for you. So today I will break down the Stochastic Oscillator, the indicator that helps to see where the price closes within its recent range, and how to understand from this when the movement may begin to change. So I will show you how to read it calmly and without any guessing, and then we will fix it in practice with trade using the same rules. So what is stochastic oscillator, guys? Stochastic is a momentum indicator that compares the current closing price with where the market was high and low over the selected period. And it's always in the range from 0 to 100, so it's convenient to use it as a visual thermometer. And at the top of the range, the price closes closer to the highs and at the bottom closer to the lows. The main benefit of stochastic, it helps to notice moments when momentum begins to change. And the market may be close too hot or too cold conditions. Plus, it's flexible. Its sensitivity can be decreased or increased by changing the observation period and smoothing. On stochastic, you will almost always see two lines. %K, this is the main line, it shows the current value of stochastic, and the %D, a more smooth line. It is the average value of the %K over a short period. And the idea is simple. When these lines change their relative position, it often hints that momentum may be restructuring. So traditionally, guys, stochastic is read like this. Well is above 80, potential overbought. Well is below 20, potential oversold. But here's an important point. This doesn't mean a reversal right now. In strong trends, stochastic can remain in the upper or lower area for quite a long time, and therefore I perceive these levels as a signal to be more attentive and not as an entry button. The first clear signal, the crossing of the %K and the %D. The logic is this: a crossing shows that momentum is changing noticeably enough, but I always look at the context. So if the market is in the flat, such crossing may work better. And if the market is sharp and noisy, crossing may give false signals. The second, strong signal, divergence, when price and stochastic stop confirming each other. An example, so in simple terms, guys, so price makes a new low, and stochastic shows a low higher than the previous one. This may mean that sellers are losing momentum, and the market may start a reversal upward, or vice versa. Price updates a high, and stochastic doesn't update the high. Upward momentum may be weakening. And again, divergence. This is not an entry with a click, but a warning. And confirmation is better to look for through structure or the trend. A useful thing that is important to know: fast versus slow stochastic. So stochastic can be more fast and more slow. The idea is that the slow version smooths movement more strongly and usually gives less noises. And the fast one reacts quicker but may push more often. So I advise beginners to start with a smooth version so as not to catch unnecessary false impulses. Stochastic is often considered especially useful in sideways markets and ranges, where the market moves from the upper boundary to the lower. But during sharp use, driven movement it may give false signals more often because the indicator just suggests. But the price is not obliged to reverse immediately. Therefore, the practical rule is simple. To reduce mistakes, use a trend filter and take signals in the direction of the dominant movement. So I'm often asked how stochastic differs from RSI. So both are momentum indicators, but it's usually considered that RSI is more convenient in trending movements and stochastic in ranges, when price really moves inside a corridor. Therefore, they are sometimes used together, guys. One helps to see the trend, the other to catch the moment more precisely. Main limitation of stochastic. So it can give false signals, especially when the market is volatile. And therefore, the most reasonable approach, not to trade it alone. First, assess the trend of the market, then use stochastic as confirmation and not as the only reason for entry. And the transition to the practice, guys. So stochastic shows where the price closes inside the range and helps to catch moments when momentum may start to change through the 80-20 levels, crossing and divergences. And guys, now let's move to the practice. I'll open several trades and go through all the theoretical material in practice. And if you want, just write the word strategy in the comments and I will record my real trading for you guys and demonstrate my strategy based on the stochastic indicator. Well, I'm already on the bracket, guys. So today I analyzed the stock market of different companies. So here they all are. There is a good payout percentage on each asset, is the maximum percentage, and that's exactly what I need. So today we'll trade specifically on this market option. Overall, the movement on each asset is more or less acceptable. So let's select our stochastic indicator. And this is how it looks. And for this particular market format, I need to slightly adjust its settings. We're gonna open trades with a 3-minute expiration time and conduct market analysis on the 1-minute time frame. And in order to see the movement more clearly, guys, in the areas we need, we will change the periods. Well, here we'll set the period of 20 and here is the period to 4. And at the moment of changing the settings, you can see that the behavior of the moving lines oversold. Just the moving lines changes, yep, and it changes for the bottom. And you can pay attention to the overbought and oversold areas. They are at 80 and 20. And we have a blue moving line and an orange moving line, and the range is from 0% to 100%. From 80 to 100% is the overbought area, and from 0 to 20% is the oversold area. So here are the key levels specifically highlighted. Well, guys, today we will focus on the stochastic and add technical analysis. We're really interested in the reversal pattern, so we'll identify resistance and support areas, maybe draw a trend line somewhere. But we will see that in the process, yep. So let me begin the analysis, and as soon as I find the ideal movement format for opening a trade, we will reconnect. So let's go. Now let's focus on this asset, I think. This is the McDonald's stock, and most likely with the appearance of a new candle, we're gonna open a sell trade. And now I'm gonna explain the logic behind this entry. And about 10 seconds remain until the opening. The movement dynamics on this asset are pretty good. I like it. And yep, we're just opening it. It turned out that I opened 2 positions. That's fine. We opened 2 sell trades. Yep, let's move on to the more detailed analysis and mark the working area. Well, previously we see that there was an upward trend. Then we just fixed the flat dynamic. It may become the reason for a further trend reversal, and just meaning the trend could turn downward. But for now, we cannot say that for sure. Overall, we're interested in the next 3 minutes of movement, and we just highlighted the resistance area. There are maximum peak points from which reversal in movement occurred. And this is the first case, the second case, and in both cases, guys, we see almost identical moves into the overbought area on the stochastic, and then a further just crossing from this area. Overall, there is nothing complicated here at all. We see that our oscillator moving lines cross each other, show the crossover, and then the crossing from the overbought area. And in our case, this is the area marked at 80, so the entry point is not that complicated with additional analysis. And opening two sell trades makes sense. And let's watch, guys. And we just have a reaction. The price moved upward again, and we're gonna open additional trade there. Oh wow, guys, the candle just showed a very good impulse, so we probably need to catch this impulse once again. We opened two trades for a total of $200, and of course we do not want to go into a loss here, so the next trade will be opened with an amount of $500, and probably the close of the current candle, or if the current candle shows a sharp upward movement, then we're gonna open a trade. But it seems like that wouldn't happen, so we are waiting for a new candle to appear. And as I mentioned in the theoretical part, using only one oscillator in trading and generally applying only one tool is not entirely correct. And for a more precise definition of the entry point, you need to interact with several indicators. So here, however, we are looking exclusively at the price movement dynamics and relying only on the oscillator. So there can be false signals, breakouts, it can be reversals. No one is insured against that. And if I just had more indicators to rely on when opening a trade, I think the first two trades would also have closed in profit, since I would have chosen a more accurate entry level. Now I'm just so confident that the trade should close in profit. So why? Because the price has once again touched our area, resistance area. But at this moment, the stochastic didn't move up into the overbought area, and it's still directed downward. So therefore, we already understand that the movement dynamics should go lower, and we have just sideways market. Earlier there were strong upward volumes and opening a sell trade approximately at this level makes sense. It's just justified. And the most accurate entry probably would have been right here, just at the peak of this red candle when the price entered our highlighted area again. And as you can see, after that there was an immediate reaction downward, and we opened the trade a bit later, with the appearance of a new candle. But I think this just wouldn't affect anything anymore, since the position was opened correctly. Because if you use only the stochastic in your trading, you definitely need to combine it with a technical analysis and just understand the movement dynamics on the chart. So if you are not confident with that, with this tool, then you need just additional indicators and tools for analysis and for selecting the correct entry point. Pretty confident close of the trade in profit, and as a result we are in profit. $250 in profit. So excellent, I would say. So this option fully satisfies me, and we analyzed trading on this asset in more detail. And the first trades closed in a loss, but that's fine, that happens. And guys, as you can see, the entry logic was absolutely correct. And later the movement just goes downward. You can see there is a red candle. So that's how it turned out. So guys, I hope everything was clear and that I was able to explain everything in detail, just in a structured way, and that there are no any questions left. So guys, if you still want to clarify something, you can write me in the comments under this video. Find the link in the description of this video to the Telegram. Just join, message me, and become part of my community. And this is how Stochastic looks in real time. So we identify the market mode, waited for a signal, and added confirmation. Therefore, the trades turned out successful. So Stochastic works most correctly when you look at the context and confirmation. So guys, thanks everyone for watching. And if you want to trade in similar stations in a close community with me and my team, you know where to find me. So all the necessary links and the contact links you will find in the description of this video. So just message me and see you.